will be taking the NACPB bookkeeper exam, which is basically based on Accounting 101. So you had all the information. You may want to review some of it. I did give you the cumulative Accounting 101 quiz from the end of Accounting 101. I put up in the beginning of this course for you to take, and I have set that up so that you can go back in there, look at the questions, what you answered, what the correct answer is. Let me know if you have any questions on any of those. I've also put in D2L, they do have some questions about basic payroll. And in the past, we did have some basic payroll in the Accounting 101. And over the last handful of years, we ended up removing that. We do go over some of it in Accounting 116. And of course, we also have a payroll class. So if you've had those, then you may not need to look at this stuff here. But for those of you who have not had Accounting 116 or Accounting 150, you may want to look through these. There's payroll calculations, PowerPoint that goes through basic how to calculate out the federal income tax, the Social Security tax, Medicare tax, come up with the total deductions, subtracted from the gross wages to get the net pay. And there is also, you have to calculate out the cost that the employer has to pull out of their own pocket. They have to match the FICA, which is Social Security and Medicare, and they also have to pay unemployment taxes, FUTA and SUTA. So that this PowerPoint here called Employer Costs goes over those responsibilities. The employer also has responsibilities towards depositing. They have to take the payroll taxes out of the employee paycheck, plus they have these employer costs that they had to pull out of their own pockets. And all of that is due to the IRS or the state taxing agency on certain days at certain times. And so this last PowerPoint goes over those basic depositing rules. There will probably only be like one question on employer costs and one question on the depositing. Maybe a couple of questions that come from this first PowerPoint. So, you know, it's not a test on payroll, but there are some basic payroll-related questions. And if you haven't had any payroll knowledge, then you may want to go through those three and kind of just get at least the general ideas. Now, one type of question that I noticed when I took their practice exam was on trade discounts. They in fact didn't have any questions on cash discounts, which is what we learned how to do, especially in Accounting 240. We only had one transaction in all of Accounting 240, just computerized accounting, that related to a trade discount. And we didn't talk about, well, I might have had one sentence in a lecture about trade discounts in Accounting 101. We did learn how to do regular cash discounts, which cash discounts are the ones if we sell on account to a customer and we have terms, credit terms such as 210 net 30, then the customer gets a 2% discount if they pay within 10 days. And otherwise, they have to pay the whole amount in 30 days. That also applies to vendor transactions where we purchase inventory or anything on account, and the purchase invoice may have credit terms such as 210 net 30, and we would get the 2% discount if we pay off the bill within 10 days. Okay, so we did learn how to do those in Accounting 101. However, they seem to be had more questions. I'm sure there's a shuffling of questions on those practice exams, and the one I took happened to have a large amount of questions related to trade discounts. So I want today to just quickly go over the trade discounts. Okay, if I have a sale and it's $100, and if I have a trade discount, then that comes off the top before I do any kind of journal entry or any other kind of calculation of any other kind of discount. So if I have a 10% trade discount, then I can multiply that sale times the 10%, or 0.10. Okay, and that gives me $10. That's my trade discount. Of course, I can take the $100, subtract the $10 trade discount, and that's $90. That is what goes in my journal entry as my sale amount. Okay, so I would debit accounts receivable for 90, not for 100. Okay, not sure how much of that got lost, but once you calculate out the sale amount, that's how much goes in the journal entry. So I'm debiting accounts receivable and crediting sales for $90. Now, what we learned in Accounting 101 again was about a cash discount, in which case if we had, say, a 210 net 30, we would have put the whole 100 in for the sale. Accounts receivable would have been debited 100, sales would have been credited 100. Then later, if we pay within the 10 days, then we would calculate out the 2% discount and put that into an account called sales discounts or purchase discounts, whichever. If it was a customer that was paying us and getting the 2% discount, we put it into, we debit contra revenue account called sales discount. If it was us, getting the 2% discount, we would credit a contra expense account called purchase discounts. Okay, so just realize with the trade discount, the discount comes off the top, and what you have left over is what goes in the journal entry. Now, one way you can do this a little bit quicker is to take the complement of the discount. So the complement is what goes between that discount and 100. So if it's a 10% discount, the complement of that is 90. So I can take 100 times, instead of 0.10, I can take it times 0.90, and that will give me $90. Okay, so rather than doing it in 2 steps where I determine what the trade discount is and then I subtract the trade discount to get the sale amount, I can use the complement and get the bottom number that I'm going to use for the journal entry. Now, what if there's 2 trade discounts? So let's say they say there's a 10% trade discount and then a 20% trade discount. Well, first you would do the 10% trade discount, which is the 90. Then I would take the 90 and calculate out the other trade discount, the second trade discount. So that is 20%. Again, I could do it in 2 steps, but if I want to be more efficient, the complement of 20%, what takes it to 100, is 80%. So I take the 90 times 80, and that would be 72. So if there's a 2-step trade discount, there's a 2-step trade discount, you first get down to the first amount of the sale, and then you use that number and the second trade discount to get down to the final sale number. In which case, in this case, we would use the 72 as the number for our journal entry. Okay. One other thing that is something you should know is that from what I could see, they use the periodic inventory system. And so this is slow. Now we, in Accounting 101, we took our time, most of our time, learning about the perpetual inventory system. It is used primarily by a larger size company. But we also learned a little bit about the periodic system in your Accounting 101 book. That's what we started with when we first learned about purchases of inventory. In the periodic system, you have an expense account called purchases. So if we were purchasing, say, the $72, okay, the $72, if that was a purchase of inventory from a vendor on account